All right, everybody, it's time for this week's Mortgage Minute with Tatiana from Prosperity Home Mortgage. Hello, and happy day after Halloween.
Hi, guys.
I have a feeling you got spooky news. That's my guess.
I have spooky news. As always. Let me see. Right. So the rates went up again, the fifth consecutive week, 6.78 on conventional, 6.67 on jumbo, so it's a little bit better. FHA 6.43. So, with all this, elections and job reports and oil prices, it's a roller coaster, actually. The rates were going up. Last night, this morning, they dropped a little bit. Now they're going back up again. So we have fun watching them jumping up and down.
They got over 7 at one point, didn't they? Didn't they hit like 7.03 at one point this week?
Yes, they did actually. The different charts showing different rates. So this one right here, and I have disclaimer here, it's based on 780 score and more than 40% down payment. So that's why it's showing a little bit lower. If it's 20% down or 10.5, it's about the same interest rate, and it's around 7%, definitely. So rates are up. If someone is waiting for elections and they think that magic is gonna happen, I would not recommend floating unless you have a couple of months to go.
Wow.
Yeah, so I don't know.
You said you would not recommend floating at this point?
No, I wouldn't, because it's too volatile, and we don't know what's gonna happen. I don't think either party wins, they're gonna do something with rates. It's just, I don't think if it drops, it's not gonna drop drastically. So
Yeah, and it's certainly trending up. So I agree with that. When I saw it hit over 7, I was like, oh man, it's been a little bit. Even though it's still not a bad interest rate, it's just compared to where it was going, it's a little bit higher.
Yeah. So this chart is right here. I don't know if you can see October 6th, and now in November, it's gradually, steadily going up.
Yeah. Wow. Okay. So recommend locking then.
I recommend locking. I do.
Okay.
Yeah.
Okay. All right.
Good.
Thank you. I mean, crappy, but thanks. Thanks for that. Would you dress up like a witch last night?
We celebrate Halloween every year. I have the closet full of Halloween costumes. I don't know. I think I can open a store, but I never had a witch costume. Never, ever. I don't know why, but I have everything else.
Can I raid your Halloween costumes next year? Because this year was the first year I did not dress up.
Absolutely. I have a lot. Very good.
You can use our T-Rexes.
I'll remember that.
Yeah. All right. Okay. So we have our weekly question. We just shot a video on how to use your primary home as an investment and how to use that to start building your investment portfolio. And one of the things that we brought up was a rehab loan that people can get where they can actually do the repairs. So we didn't know all the details on how that works. So what can you tell us about that? What can you help us understand?
Yeah. So the rehab loan, they have two options: conventional or FHA. FHA, widely known as 203K loan. It's a rehab loan. Basically, you borrow money to repair a property, right? So you can actually do it with a purchase or refinance. So if you already have existing home and you need to get money out and maybe you don't have that much equity to take money for repairs, you can do a rehab loan. So the way it works, let's say it's a purchase, right? So there's a property that maybe it's in okay condition. I mean, it will pass inspection to get a mortgage on, but it's dated, it's original, and you know that you need to change everything in there, but you don't have enough money. What you do is you get a bid from construction company that lays out what's going to be done and how much is going to cost labor and materials, and you present that bid to appraiser. An appraiser would give an after repair value, meaning right now house worth 600,000, but after all these repairs it's gonna worth 800,000. So they take the repairs in consideration, and so then you get a mortgage. So you can put as little as, depending on the program, you can put as little as 3, 5, or 3.5% down, but and then you get additional funds for the repairs. Let's say you need 50,000. They're gonna put them in an escrow account, and then the repairs will start after the settlement. And you know, you can draw money in portions. Important to know that, you know, the company that will do repairs, it needs to be approved by the lender. It has to be general contractor. You can't really do it yourself, especially if you're not a general contractor. So it has to be a company, and then they need to understand that the money will be dispersed in portions after the job is completed, and you can divide it into few different sections, right? So you'll do the kitchen, we'll give you the money. You'll do the bathroom, we'll give you the money. So that's how it works. And you know, the repairs would have to begin within 60 days of after settlement, and typically complete within 6 months, but it depends, you know, there is extensions available depending on maybe the weather, or if you know, materials were delayed or something like that. So there's always that extension possibility. So it's good option for you know, someone who doesn't have money, or it's really good option when the property is really distressed. You cannot get financing on it unless you buying it in cash or doing this renovation loan.
Okay.
So that's basically, in a nutshell, that's how it works.
Okay.
And it's almost kind of a benefit because you've got somebody kind of looking over your shoulder to make sure that things are done correctly. And it's kind of a second set of eyes that have experience looking to make sure your contractor is doing it correctly.
Right, and it depends on how much work needs to be done. The money wise, you know, they have limited or standard renovation process. If it's more than 35,000, typically they would need to have inspectors coming in and checking it out.
Okay.
Very good. Did you have something you?
I did have a question. So it's within standard limits. So I guess it would be difficult to get one of these and try to get like one of the more boutique construction companies, right? One of the more customs that, you know, charge a lot more, right? You would probably have to get hire someone who is more the standard.
I think it all depends on after the repair value, how it's gonna be. If you just do some basic stuff, I would think that it depends on what they do, what type of materials, and you know, if the cost will be justified with after the repair value, then it's fine.
Then it's fine.
Okay.
I like that option. I think that's really great. Because then if it's a distressed property, it would be understood that it doesn't have to pass all the usual inspections in the beginning, right? Because that's going to be figured into the repairing.
Exactly. That's why when the property is in really bad condition, this rehab loan is the only option when you're trying to get a mortgage, because we don't require, in regular situation, we would require repairs to be done. If there is, let's say, you know, electrical wires are exposed, right? We're gonna say it's a hazard issue, so it needs to be fixed before we loan the money. In this situation, because we know it's going to be done and we're holding the money in there, so it's a special loan. That's why we allow them to settle even though the property does not meet the standards.
Okay, so it could be an as-is property then.
Exactly.
Okay.
Good.
Okay, and this is conventional has something and FHA has something, but does VA have anything?
VA does have, we personally don't work with this type of program, so
Okay.
I don't know much about it, but I would imagine
Okay.
it's the same type, but we don't work with
The
it.
Similar.
VA buyer could maybe find something.
Yep.
Okay,
All right. Very good.
thank you.
Yeah, that's helpful.
You're very welcome.
All right. If anybody needs you, how do they get in touch with you?
Call me at 571-245-3000.
All right.
Right.
Very good. We will
Thank
see you
you.
next week.
We'll see you next week.
Bye.